Good morning, everybody. Welcome to Phoenix Trading Strategies Trading Room. Today is January 30th, 2015. Strategic knowledge and information allows you to trade successfully. Let's go to the disclaimer before we continue. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. So I want to welcome you to Phoenix Trading Strategies. For those of you that are new today, my suggestion is that you go over our website, the welcome page, the About Us page. That one's really about me, my journey as a retail trader to becoming a professional futures, commodities, and forex broker, as well as a trader, and everything that I have come across and my specialties. I think you'll find it very, very interesting since I've walked in your shoes. Our indicators, you can go here, and under our indicators, you can actually see, give it a second. Once you hit each one, hit the picture, it'll give you a description of each indicator, the packages that we offer, all the indicators in a 3-day training is here on this one. 4-hour webinar on portfolio rebalancing, 3-day live training, and portfolio rebalancing plus the Phoenix FX radar. We also have the blog, and the blog is really, really good because the blog allows you to see what we have done in the past week, from trades to videos that we've done on trades. Last week we made over 700 pips on the Europeans right before the European Central Bank announced their quantitative easing program. We were in these trades literally 4 hours in advance and reconfirmed the entries a half hour beforehand. You can see our trading videos as well. Where we have quite a bit of a good library of information for you guys. And you can also see the latest trades. We will be posting today's trades on today. We made 67 pips yesterday, on Wednesday actually, on the euro dollar. An hour. We were in the market an hour before the Fed announcement. It was incredible. I had a client of mine with me, and he was right next to me because he lives here very close, about 30 minutes away. And he was like, "Do you feel so confident about taking that trade?" And I go, "Yep, it's mathematically calculated. You can't go wrong." And true to the word, when it hit, and we ended up making 67 pips. You can see the snapshots of the trades, where our entry was, and what the end result was. You know, sometimes you just gotta go with the flow. So being that said and done, now that we've covered part of the website, let's go to the calendar and see what we have today. Today they announced GDP numbers for the U.S., which are important. They were not that great. You know, as you can see here, we have negative numbers in comparison to what we should have had. We're still, you know, at least employment cost index was pretty much the same. So nothing changed. Now we're waiting for PMI, Chicago PMI, which is at about 7:45 my time, 10:45 a.m. Eastern. So very soon we'll be able to see what they do. Leap Rate is always a good website for you to go to because it gives you news, keeps you up to date with what everyone's doing, which is always very interesting. I just want to put it out there for you guys. So in the meantime, let's go to the charts and we'll start analyzing some of these trades. Okay, so this trade right here, and this is the euro yen. I took 4 trades: pound yen, euro New Zealand, and US yen. I actually woke up in the middle of the night, which is for me the middle of the night, And as you can see, it was down here 12:40 Pacific, which is 3:40 a.m. Eastern Time. And I pretty much had a good idea that this one was going to go through. The reasoning behind this is that, as you can see, there was a level of power dots right here. Now, when I looked at the volume here, the level of power dots identified very clearly that they were not going to break above this level. They weren't going to challenge it anymore. You can see the trend stop had been forming here. So even though I didn't have dots here, I could easily say that what was happening here was something very similar to how the power dots form. And when they form, sometimes you may not get power dots in that level, but if you can identify that that is a very important price level by them, and you can see here where it was, that they never challenged it and they just went long, then the same concept applies when they're going short. So if you identify these levels and they're validated, sometimes you'll see trend dots forming around them, or in this case a trend stop, which is what we have here. My mistake. Which is the trend stop, and so that's really what did it. Let me close this trade because it's time to close. Thank you kindly. So what that actually means to you is very simple. What that means is that, let me move this one over here, be nice. I'll take another snapshot of this one a little later. What that means is that because the volume here, and one of my clients actually, told me you need to explain the volume more. So I'm going to explain the volume a little bit more. Now here we have the total volume. Here we have the buying volume by the banks, the selling volume, and the net. So right before my entry here, and I looked at this and I analyzed this very well because I was looking at the pound yen. The pound yen had the signal more than this one. I looked at the fact that they had come and challenged this. Now, when I looked at this, I looked at the volume here, and the volume here is telling me on this specific candle, even though there really isn't much movement here, as you can see, there was 260 million of buying volume against 309 million of selling volume, a difference of 48 million. That means that they were trying to sell as many orders as possible at this price level or right under it. And so sometimes when you have that, it sort of demonstrates to you the emotion and desperation of them needing to get out of their long positions before they actually take it short, which is exactly what happened. This next candle here, where I entered, the volume increased, but it never broke above this price level. As you can see, the volume here was 318 million long, 347 million short, a difference of 29 million on the negative. Now, because of the increase in volume and the fact that price action did not follow through to challenge this price level of 133.75, that was very significant, and that is the reason why I chose to take this trade. This next candle, you can see the difference. Volume pulls away from this price level. It decreases 184 million on the buy side, 286 million on the sell side, difference of 102 million negative, and it finally came down. So when you look at that, it sort of justifies what was happening. Now, I knew that it was going to come down, but I was not going to be waking up in the middle of the night to close it because I knew it was going to have a good run for the session. So it came back, retested. As you can see here again, you can test the waters with the volume. 212 million long against 159 million short, a difference of 54 million long, and they did not attempt to break this price level. That is where logic does not make sense. The math doesn't add up with the volume. It adds up with the volume, but not with the action. And when you see that, that makes a difference. Now here, there was a pivot here, this purple dot. Same thing happened here. So you could have actually taken this trade twice. You could have had two entries. You could have taken the trade here, and you could have taken an entry here. Now here, for instance, 194 million on the buy side, 275 million on the sell side. And again, the volume that they injected into this candle does not justify the fact that they would not challenge this price level. Because now, here's the reason behind it. If they challenge this price level, then they have to buy and take it long. Why? Because this price level has already been identified by them that if they were to break this price level, they have to go long. And if they break below it, they have to go short. Well, that's exactly what they did. And that's exactly what we're seeing. So let's go to the next trade, which in this case is the Euro New Zealand. I'll probably have to close that trade right now as well. Actually, no, it keeps on kicking. Gotta love it. So my entry was here. And the reason for it is because even though there were no power dots here, what I saw here was a very good visual, actually. You see right here, this price level was identified. And we'll draw a line right here. Now, not only was it identified, but the trend stops were right below it. So when it came down, they bounced and immediately pulled right back above it. When they pulled right back above it, that told me, okay, they're not going to challenge this anymore, and they went long. My entry was here. I was a little bit late in the entry. They came back, as you can see, retested the level, bounced right off of it. You had power dots right here, so you could have had a better entry here than mine. It was late. I was tired. I wanted to take the trade. I knew it was going to run, and so I took it. The end result right now is 592 pips. Not bad. Not bad for a trade. And let us put a little arrow right above that puppy. Okie dokie. We'll take a snapshot of that later. So you could have gotten an entry here again at 4:50 a.m. Eastern Time, which is 1:50 a.m. Pacific Time, which is what reflects on my charts. And as you can see, they never looked back. They came back and retested, but boom, bounced right up. Why? Because this price level was identified at the very beginning because it was a continuation of the previous day. Whenever you see power dots as a continuation of the previous day, if you see them trading around it, it means that they're setting up for something. And if they break above it, then start looking for pivots and trend stops, because you may not have power dots right away, and they may appear on the opposite side. However, if they break through, then this is the reason why. As you can see, this became another level right here. Now, it wasn't the level that I would normally look for, but it made sense. Why? Because this level, as soon as price action broke above it, it also changed the way their frequency of volume was trading around this price level. So when they came back to challenge and then immediately popped up, then I knew that that was it. They were done and it was going to go long. No question about it. So you could have had an entry here, and then as soon as you saw that it traded right above this price level, which was 155.58, and this candle popped, then at that point you knew that the next one was definitely going to pop, and you were good. So that was a great example as well. Let's go to the next trade, which in this case was the pound yen. And I apologize if I'm not taking your questions right now, but give me a minute. Okay, this one here, 86 pips so far, not bad. My entry was here. The power dots formed right here, which was a continuation of this, which was a continuation of this. When you have this is what I call a triple base hit, not a home run. This is the home run because it shows that they're going to continue. Look at that. Boy, they love continuing. This one's probably going to generate like 90 pips, almost 900. I like this one because I knew that it was going to go. No question about it. This is the one that told me that the euro yen was also going to drop. So I went off of what the pound yen was telling me. And it was really a fascinating trade because you had all the components. When you look at and you analyze the volume, oh, look at that thing just drop. All right, it's time to close that trade. Actually, let me take a snapshot of this one because this one's much better than the previous one. Yeah, it's okay. Take the trade. All right, let's close this one. Yeah, I like you too. And we're going to put a little arrow right here. Now, the beautiful thing about this trade is that it had all the components. Let me change the arrow here. It had all the components. It had the pivots. It was repeating basically a trend to the downside, and that's what the power dots identified, that the trend was going to continue. So as soon as I saw the third one, I said, you know what, you can't doubt it. There's no question. I mean, it's a trade that's just going to go. You know, you just cannot. And so this is one of the things that I teach you guys in the 3-day training is how to identify opportunities where this one is one that I normally call where you throw the kitchen sink and your mother's kitchen sink along with it at a trade. Yeah, this is the one. So this was a beautiful trade. And then this one, I mean, you had pivots again. I mean, you just couldn't go wrong. These trades are mathematically calculated. Our algorithm is basically tapping into their volume activity and price action. And so it gives you results that normally you would not expect. Why? Because it removes fear and uncertainty from your decision process. That makes a big, big difference. Big, big difference. So let's go to the US yen real quickly. I'm curious to see how that one's trading. Who knows, I just may end up making 300 pips today. Let's see. No, maybe not. Sometimes it's time to cut it short. Let's take a snapshot of this actually. I'll close this one out. Yeah. And we will close this one here. Thank you. And we will mark it. And we'll take a snapshot of this later. Okay, wonderful. So let's go over this trade. This trade, same components as the pound yen and euro yen. A continuation, you know. Price level here was broken, came down, retested right below it, as you can see. I'll draw a line. And this is why it's important for you to understand price levels. We use price levels because they use them. They tell us what they're mapping out. When they map out the trades and price levels that they're trading around, we pay attention and we listen and we focus because they're going to give us the information that we need in order to basically make these trades. So at the end of the day, yes, one of the things that makes sense is this. Yes, this is being recorded. So my entry here again was based off of the signal that I got on the pound yen, and it was again 3:40 a.m. Eastern, 12:40 p.m. Pacific time. So when you start to analyze a lot of, you know, the way we conceptually analyze these trades, you just can't go wrong. The results are astounding, even to myself. You know, my client who was with me, she's actually a CTA, and we used to work together at PFG Best a while ago. And when I showed it to him, he couldn't believe it because I gave him signals. I gave him 5 trades 3 days prior, or for the past previous 3 days before the Fed announcement on Wednesday. And he couldn't believe the results. But when he saw it live, in the live edge of the market, then that's where it made the difference. And that's what you guys are seeing. You guys are seeing results from my trading. Now, I have better news for you. Next week, Wednesday night, which will be Thursday morning for many of you, and Wednesday, which would be 11 p.m. Pacific, 2 a.m. Thursday, I'm going to actually open up the room, and I'm going to send you a link for you guys to sign up, and you're going to see me actually take live trades in the live edge of the market. You're going to see my thought process. You're going to see how the software works. And so at that point, you'll be able to really analyze and determine how the market's reacting and how our algorithms are adjusting to the information that the market makers are providing. Because we decipher their volume activity. And make no mistake, there is no real volume in FX. The volume in FX is, in what we do, is we actually synthesize the volume. We synthetically create it based on the information they provide through the aggregator, to the bridge, to the broker-dealer, to the platform. So when we do that, it changes the whole game, because now you have a way to actually have a feel of the emotion and volume behind each candle. You're getting to see the inside, and that's something that you can't see, because in actuality what has happened is they've kind of programmed how they report their volume, because a lot of, there are a lot of volume indicators out there, and make no mistake, an IndiTrader has them. I'll show you one, for instance, real quickly, and this is a normal volume indicator that everyone out there uses. This one is mine, it's proprietary, and no one out there has it except me. But I want to show you something because I think it's important for you to see. And I'm going to explain it to you. The volume indicator that everyone uses out there is this one. And this one is based on moving averages. This one is not based, and it's based on open, high, low, and close. And there's a lot of people out there that use it, and a lot of people out there talk about volume spread analysis that don't really know what they're talking about, because they're using this indicator. My indicator does not look like this. And number two, my indicator actually shows you the volume inside each bar. That's huge. So not only is it telling you the total, see, this one is telling you that there's 387 million currently in this bar, okay? My volume bar is telling you that currently there is, it's still not, oh, that was the previous bar, forgive me. This one's giving you the previous bar. Mine is giving you the volume as it's being reported on the live edge of the market, which right now is 213.4 million. So that makes a big difference, when you're seeing what's on the live edge versus what's in the previous candle. And that gives you a tremendous amount more of information than you need. So again, this one here was a triple decker. Why? A triple hitter. Even a home run here. Here was a home run. 1, 2, 3, 4. You can't dispute what they're mathematically doing. And that's what we're going off of. We're going off of their mathematical calculations and their algorithms, which they will not counter-program because they've invested billions of dollars, and I've invested a few tens of thousands of dollars to actually counter-program what they've done. So you get it for a bargain, of course. But I get to make a lot more money than most of you. So that's something that's very interesting. Have a question? How did you take the USD entry with power dots? Okay, very good. As you remember, the power dots, the pound yen identified that there were power dots right here. But what I looked at was the fact that the trend dots right here, the trend stop, price level, and I looked at volume around it. So I based my entry here, which was at the same time that I took the pound yen and euro yen and US yen. The pound yen was my trigger. That's the one that told me the yen is in play, and I needed to look at certain pairs that would be in play. So in this case, you can see this row right here, even though there weren't power dots, but there was one thing. There was a price level before it that was identified. There were power dots here. And even though they didn't form here, you had a pivot here. You had volume that pulled away. And you can see here the volume on this one. There was 362.9 million total. A difference of 109 million on the buy side, 173 million on the sell side, 17 million on the buy side, and they never broke above this price level. Same thing with this one. 265, less volume. 148 million on the buy side, 118 million on the sell side in this candle. A difference of 30 million positive. And it didn't break above this price level. This next one, 281 million total. The buying volume here was 130 million against 151 million on the sell side, a difference of 20 million. They pulled away. And finally, my entry, which was right here, when they really pulled away. 340 million total, 144 million on the buy side, 197 million on the sell side, a difference of 53 million. This reflected the price action and volume that I was looking for the trigger. This one told me they're done. That was it. And then after that, as you can see here, when they came here, they did the same thing, except here it did show the power dots and they did pull away. And so it was a continuation move. I was really looking at this trade. I was really expecting a lot more out of this trade. I was expecting a good 40 pip move, not 22 pips, but you know, I'm happy with the end result at the end of the day. So sometimes in regards to stops, my stop would be here at this, you know, where this level is. So it would be no more than 15, 20 pips. Normally my stop loss is right above this price level. And this price level is, let's see, 117.92 from my entry, which was 117.72. You're talking 20 pips. Not bad. You know, 20 pip. Normally it's no more than 25 pips. I don't like to put more at risk than that. But when I do something, a trade like that, normally I don't have the fear that they're going to hit it. They make them close, and especially when they have, you know, a triple signal the way they did here. 1, 2, 3, and then finally 4. After the second one, they're pretty much done. That one tells me that this next level is going to go down, no question about it. And I'll show you that one on the pound yen, because this was my trigger for these pound yen trades. Exits based on previous yellow dots, pivots, no. My exits are not based on the pivots. Normally, see, like here, you can see that these power dots formed here. You didn't see them in the US yen, but you did see this level, and you did see this level. So when you identify that they were doing the same thing over and over again, then it sort of made sense that they were going to continue this trade. So I looked for the same concept in the euro yen and US yen, but my trigger, the one that led me to it, was the pound yen. There were no pivots here, you know. I just knew that they weren't going to go any further, and so I just decided to exit the trade. So we had the same concept. 1, 2, 3, and finally the home run, 4. If you would have gotten in here, it really wouldn't have been much different from my entry. Maybe a difference of 10, 15 pips. But as soon as you see this right here, the pivots right below power dots, this is where you throw the kitchen sink, because then you know that they're really going to come down. And it's the fourth attempt, the fourth level that they are addressing, or that they are basically demonstrating they are not going to break above. Because if they do, then they have to come all the way up here. And they're not going to do that when they're planning to come all the way down here. So this is something that we go more in depth when we do the training. And finally, let's look at the Euro New Zealand. Yeah, this was a great trade, actually. I like this trade. Yes, so the combination of the power dots and the pivots, the purple pivots, are just key. I mean, it just doesn't get better than that, you know. See, there was a pivot here, right here, as you can see, right at the trend dot. And even though these formed here, I woke up at this time, right here. So when I saw this, I was like, So they were just channeling, you know. And I saw this earlier, and I said, nah, when it channels like this after a price level, I know they're setting up for something, but it's not right away. It's usually during the European session. So, again, even our exit here was very good. It just couldn't get better than that. You could have gotten in here. This would have been a great entry for you. I got in here because it traded above this price level. They ran right through it, and that happens sometimes. Sometimes you find those trades where they do such things. So at the end of the day, yeah, I mean, we came out fat, you know, with some of these trades. And we go over, you know, with the training, 3-day training, we go over price levels very significantly. I show you how to identify them in the higher time frames, and if they appear in the higher time frames, then they're validating the direction in the smaller time frames when they form. So, you know, it's a combination of the power dots, the pivots, the trend stops. The volume is very important, extremely important. Again, this volume wouldn't have told you anything. This volume wouldn't have said go long. This volume right here says don't do anything. There's no volume in the market. Well, guess what? They're right. This volume right here is not giving you any information, but mine is. Because mine, you can actually put and pull out the real volume that's taking place in this candle. And that, my friends, is what makes the difference. And when you can see what's happening inside the candle, then this is where you can say candles have been counter-programmed as well. So the market makers and banks have invested a tremendous amount of money in counter-programming common indicators out there that you use. Moving averages, what else? Stochastics, RSI, Bollinger Bands, MACD. Let me see. I mean, the list goes on and on. Pretty much every indicator out there that you can use has been counter-programmed. The only thing they won't counter-program is the volume, their volume activity. Now, everyone else doesn't really, you know, is using an old formula, using an open, high, low, close on a moving average for volume, which is the wrong way of analyzing volume. The way we analyze volume is the new way and better way. So when people talk about volume spread analysis and volume price analysis, if they're not showing you the amount of volume that's being quoted within each candle, they don't know what they're talking about because they're not using the right technology. And that's really what you're getting. So you're getting a lot of information, a tremendous amount of information that removes fear and uncertainty from your decision process. Because at the end of the day, the only thing that you can do is really take trades that make sense. And the ones that don't make sense, guess what? There's no reason for you to take them, is there? So if you're not getting $1 million picture the way we're getting in some of these trades, then basically you shouldn't be trading. And if you're trading without this technology, then you should be very careful because you still have fear and doubt in your decision process, where we mathematically calculate it and remove it from your decision process. And that's what makes a difference. So, are there any questions? today would be a good day. We can look at gold. Let me pull gold out. Yeah, we should take a look at gold and the E-minis. Yes. This one was a little weird. And normally, what I like to do with gold is that I like to see what's happening in a higher time frame. Ooh, this is nice. So this is telling you right here, and we're going to put this, we're going to put a little line right here, from here to here, yeah. And we are going to color that bad boy. And what color should we use? We should use this one. And we're going to make that bar a little bigger, and we're going to leave it solid, and we're going to go down to the 15-minute. Now the 45-minute is wonderful. I love the 45-minute when trading commodities. And you can see here, beautiful. Not only did we have on the 45-minute, but on the 15-minute it showed. So as soon as you saw these power dots form right above this price level, which was identified in the 45-minute, you knew this puppy's coming down. No question about it. Now, can't really expect a big run, but, you know, I can say in this case, I would like to say that from here to the open is $7.2, which is not bad if you would have gotten in there. Even though I'm expecting it to come down here, possibly a $10 move, but we're late in the game. And if I'm late in the game, I'm not taking any trades. Let me remove some of these indicators from here. Indicators, indicators, indicators. Because I don't need this one. Remove. Okie dokie. So yeah, if you're trading gold, if you're outside of the US and you're trading gold and you're using our technology, I wish you great, great fortune, because you're going to find trades that are going to just blow your mind. No question about it. The price level you were looking for is not in the small time frame. It's in the big time frame, in the 45-minute. This is the real direction of the trade that you're looking for. So, you know, I'm giving you guys pearls of wisdom right now. Make no mistake. I mean, this is where it just says, wow. Where would I have entered in this one? Yes, you would have made a killing. Yes, 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 yes. So what you can do is pay the full invoice, Arisak. Actually, here in this one, you know, if you could have taken the entry here, you would have probably picked up at least $4 or $5. Oh, it's still continuing. Lord have mercy. So no, it'll be a $7 move. Yeah, no, it looks to be like $7 moves. And see, you know, this isn't the first time we've seen trades like this in gold. You know, we've identified these trades on the live edge of the market the way we're doing now. Now you can see volume is insignificant here. However, it's our volume that makes sense. We don't care about everyone else's volume. So, for instance, right here. Let's see the volume of orders here. It wasn't really that many. Look, total was, you know, in this candle 54, 28 long and 25 short. So you could say, you know, you can add an M to that for million, difference of 3 million. And look at this thing. Look at this candle. You know, 24 total, 13 long, 11 short. You know, can you make a decision off of that? Well, not really, but I can make a decision off of the price level, because sometimes they're not going to show their full hand. So when you start to see how they trade around a specific price level, which is what they did here, they had pivots, 1, 2, you know, 3, and then 4. They came right back, challenged it, but never ever traded above it. They went above it and never closed above it. And then these beautiful dots formed, and that was the end of them. So, you know, it went from 1264 to 1259, and that's like a $5 move. You know, if you had one contract, that's like $500. You just, you know, it's a beautiful thing. I mean, you know, I love gold, but sometimes I miss some of the trades on gold. You know, it's, you know, I either trade one session or another. You know, if I had more hours of sleep, it'd be different, but I don't. So that's just the way it is. Let's take a look at the E-minis. Let's take a look at the Dow and see if there was any opportunity to identify some of these trades. Oh, all right. Let's go to data series 45. You gotta love the 45 for commodities. It's just incredible. Believe me, the banks knew what I was doing. Well, they can't. They simply just don't know. And even if they did, they'd have to spend billions to counter a program again. And of course, man would just see right here, identified this level right here, and look what they did. They bounced right off it. Bunch of jerks. Let me remove that one, actually. I'll put a line. And then we will gold. And now we'll go to the smaller time frame. Let's go to the 15-minute. Now, in commodities, it's different because you can go to the smaller time frames like the 5-minute. But see, look at that. Look at how they hit that level on the 45, and then it just bounced. I mean, if you would have known this, you know, after it going short, you wouldn't be caught taking this trade short because you knew that they were not going to violate this price level of 17,239, which is, you know, 240 is right here, right above it. So they were going to bounce right off of it. And if you knew that, would you continue to take it short? The answer is no, you wouldn't. But if we go to the smaller time frames, let's go to a 5-minute. Let's see. See here, again, no power dots. And sometimes that happens. Let's see what the 10-minute has to show. But it's the price levels. If you can learn to use the price levels the way I do, which is not really that hard, believe me, you know, there is a level of comprehension to my insanity. Then you can see what's going to happen in the market and take advantage of it. Yes, this means that the market may have a good day. It may recover and go back to break, you know, to break even. So if it comes up from where it was down, I mean, that's a big recovery. And it could be because of Chicago PMI. They must know something that we don't. Well, I know more than they do at this point because I understand their price levels more than they do. Their algorithms can't tell them, hey, Ricardo's cheating. No, can't call me a cheater. But I'm on the VIP list that they never wanted. But you can be on that VIP list too if you use our software. But look at that thing. I mean, it's just kicking. So if you would have seen this trade and gone long from here from 17,240, it's gone up over 100 points. I mean, you would have a really, really a very big smile on your face. And that makes a difference, ladies and gentlemen. That makes a difference. So yes, at the end of the day, you know, it comes down to how can you take advantage of this? Well, there's two ways. One of them is by investing years and years of research the way I have, and tens of thousands of dollars to developing the software and thousands of hours. Like me, exactly. The other way is purchasing the software. Now, today is the last day. The special is over. From this point on, it is, the regular price. So once the month ends, there are no more discounts, boys and girls. Now, take into consideration that the information that you're getting is probably the most valuable information that you're ever going to use when it comes to understanding volume, spread, and volume price analysis. Richard Wyckoff was the father of volume spread analysis, but he couldn't finish the game, and the reason for it is that he didn't have technology which was advanced enough for him back then to really make a difference. We do. We've actually taken his theory to the next level because we've been able to design algorithms that can decode the volume activity that's being presented by the market makers, how it's hidden. And that makes a big difference, huge difference. So, yeah, sometimes you have to look at it from that perspective. And when you start to make sense of what's happening, then you can see what the difference is and how it works. So for those of you that are interested, and Ted, you seem to be interested, send me an email. If you don't have the full amount, I can work out a payment option for you. I'm willing to help you guys, but I'm not going to give it away. I can only help those of you that are willing to help themselves at the end of the day. We go through a 3-day training session, 4 hours each day. Normally the training sessions are never one right after the other. We spread them out between 2 and 3 days, and sometimes even a week, depending on your level of your need to assimilate the information that I'm teaching you, plus the fact that you need to do homework. And if you don't do the homework that I give you, I don't continue with the lessons because I want you to really understand. I want you to succeed. I want to help you to understand what I understand. This is not hard, ladies and gentlemen. This is not a complicated strategy or system, but it is systematic. And it's a 5-step process. And if you can understand that 5-step process, then at the end of the day, you will have what no one out there has right now. Knowledge. Bottom line is that the truth will set you free. God is right when he says that. Because these manipulative individuals, because there's not another word that I wish to use right now, besides parasites, have cheated us, have cheated you. Because they're making you believe that, there's an industry of education and indicators out there that people want to make you believe that can continue to work in this type of environment, which is a digital world, a digital battlefield. The chess game and the rules of the chess game have changed. You're not playing chess one man to another. You're playing in a 3D level of chess, where there are certain things that you cannot see. And so they try and confuse you, where here we decode that confusion and show you what the real plan of action is. Because make no mistake, this is a war, and they plan their trades accordingly. I'll give you an example. I'll read it to you. Banks prepare their battle plans in advance to ensure that when you enter this war, your strategy will fail. Banks make you believe you have a fighting chance and let you enter the battlefield with a stick, while they have landmines, tanks, and missiles strategically placed to drive you in the direction they want you to go that lead to your financial slaughter. Every contingency has been taken by them to stop you from making money on the battlefield, because it's created by them, where they make the rules up as you go along. Oh yes, at the end of the day, they've played you like a violin. Today is different. Today, we know the type of song that they're playing. And because we know the type of song that they're playing, it makes a difference. Do I sell other softwares? No, just my own. Let me see if there's more question. Okay, sounds good, Arisak. We'll take that and I'll change your invoice. Let's see. All right, Ted. I'll look forward to your email. No, let me correct the Skype. My Skype is, and I will type it again so that there is no mistake. Did you get it? It's Ricardo at PFG. I used to work at PFG, so I never really changed that. I've had that Skype for years. It reminds me of why I do things and why I do this, because I do this to help people. Let's see. Okie dokie. So, yeah, at the end of the day, let's getting back to this. It comes down to information, the information that you need to succeed. And I believe that we have that. I believe that right now we're the only ones that have that, because I haven't found anything out there even remotely close to what we do. We're unmatched, and we're barely starting to come out. So you're getting in on the ground floor. This is where it makes sense. This is where you want to be. This is where you want to enter, because this is where we make money. And if you believe that, and you take that leap of faith with me, I will show you your acres of diamonds. You know, there's a book out there called Acres of Diamonds, and I actually heard it from a motivational speaker, one of the very first, actually. What's his name? Martin Gale, I believe. I forgot. I'll get you guys the information. But when I heard that story, it really hit the heart, because, you know, he touched upon a subject where we're all looking to succeed at one thing. But he did mention quite a few things, that it takes time, it takes knowledge. If you want to create your acres of diamonds of success, you have to put the time in to study. You have to put the time in to gain experience. You have to put the time in to become a specialist at what you do. And before you know it, you've created your own acres of diamonds. You've created your own path to success. And that's what I mean to do here, is to help you create your own path to success. Because, you know, I don't have the time to spend in front of the computer, and I really don't, you know. I mean, when I look at a trade, it doesn't take me more than 10 minutes to analyze what trades I'm looking for. The market analyzer is, you know, because we programmed it, it helps us so much, because it tells us what trades we should be concentrating on and not the ones that we shouldn't be wasting our time on. You know, like right now it's telling us to analyze the euro pound. Well, when the power dots show up and it says that, you can program this to email it to you, and the email will just, boom, wake you up. Well, when it does that, and this is on the 15 minutes, so we're going to change the time frame here. When it does that, that's when you go and you look at the charts, because you have literally a 30 to 40 minute window to assess your entry, assess your stop loss, assess your take profit. See, look at this. When these showed up, what would have been the trigger? You look at the volume, you see what it's done on each candle. The one prior to, in this case, you would only look at this one, the one prior to this one, and then you wait for another two. As soon as this pivot showed up, this told me they're done. That's it. You know, they're pulling away from it. Now, this trade was not a big trade, but you know what? It didn't have to be, because even if you would have gotten in here, you would have still made 23 pips. Conservative 23 pips. Sometimes, if you're not looking for strong emotions, 23 pips can be very significant and very consistent. And that is what makes a difference. Featured FBI agent, trader, speaker. Oh my God. So, pretty much that's all that I have to show you guys for today. I want to wish you a very good weekend. I hope to see you guys on Monday. I look forward to your emails for those of you that are interested. This is the time. And at the end of the day, like I said, it all comes down to, do you believe that I can help you? Can you take that leap of faith? Based on what I've shown you, I leave it at your decision, at your discretion. I know what I'm doing. I'm making pips every day. So thank you very much for joining me, and have a great weekend. I will definitely look forward to seeing the Super Bowl because my team is the Patriots. Even though I didn't think Brady had it in him to make it, but he did. Earl Nightingale is the motivational speaker, and you can find him on YouTube. Great speaker, great motivational speaker. One of the very first back in the 40s. You know, it was just, it hit the heart. You know, because I realized that everything that I had done was manifested in that story in Acres of Diamonds. And sometimes that's all the compensation you need sometimes. It's not about money. Money comes and goes. I know. I've made my fortune twice and lost it. First time because I was too young. Second time because my CEO decided to steal $250 million, which was a PFG. And well, this third time's a charm. I'm in charge, so I have no one else to blame except myself. I'm creating my own Acres of Diamonds, and I hope to help you create yours too. Have a great day. Have a great weekend, and I look forward to speaking with some of you. At ISAC, I'll speak to you on Skype. Thank you kindly. Bye-bye now.